Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and if you guys are looking for undervalued investment opportunities, if you're looking for kind of opinions on the macro environment, click subscribe. Love to have you in the community. I'm looking through the comment section. I like answering your guys' stuff. It kind of breaks up the monotony of charting so much. So I'm going to answer some of your questions. A lot of people have this question, so I'm going to answer it so everybody can hear my opinion on it. And again, this is just my opinion. Doesn't mean that it's the way it's going to play out necessarily. It says, when you're referring to stocks, are you referring to non-commodity stocks? Yes, I am. I'm referring to like the S&P 500 and NASDAQ, like tech stocks, stuff like that. Please explain your thoughts on what might happen to commodity stocks during a general stock market correction. Now, that is a huge loaded question. Because I'm going to tell you this. I don't know which scenario is going to play out, but I can give you the scenarios and what I think would play out if a certain scenario plays out. So scenario one is we have a very long, so interest rates continue to go up. And stocks, regular stocks, not commodity stocks, they are priced based off of interest rates. Their PE ratios are going to contract. If it's a slow, progressive interest rate move up, which I think is going to happen, I think stocks will slowly go down. And they may not be impacted in the beginning. It may take some time. And then when people start believing that these interest rates are going to stay higher, they could sell off slowly. If they sell off slowly, I think everything will be okay and commodities will be unaffected. If it's slow. Now, if something happens where rates start to increase dramatically and people get scared and then stocks sell off dramatically, then I think everything will sell off for a short period of time. I've talked about this before on the channel a while back, where if stocks sell off fast, it'll probably affect our commodity investments. But that would be a buying opportunity. It wouldn't be necessarily something that you'd want to sell out of, because the timing here is basically impossible to time. And everything is being manipulated. All of these charts where you're looking at, manipulation everywhere. They're manipulating interest rates. They're buying bonds. They're in there doing QE. They're literally have a blank checkbook, doing whatever the heck they want. So it is at the whim of whatever they decide will happen. And I don't know how this stuff tapers off. I don't know if they just say we're done at this date. They chop it off and then the whole market gets scared, which I don't think they'll do. But it all depends. And I don't have that answer for you. All I have is that if they chop it and interest rates go up dramatically, you could see a good sell-off, which could affect our investments. In the short term, though, it'd only be short term. It wouldn't be a long-term effect. And here's another thing. I know a lot of people, they're so fixated on what happens over like a 4, 5, 6 month period. If something does happen where the stock market sells off and tech stocks sell off, I mean, they could very well go up. If they hold rates down and they just keep pummeling money into it, I mean, tech sector could go way higher. There's a possibility where stocks go a lot higher and they don't go down. And money just floods in everywhere. The hyperinflation in Germany, when they had that hyperinflation, the first stage was a huge stock market bubble. Everybody rushed into stocks. Then right after that, everybody's like, oh no, this is not good. Then they all rushed into precious metals and commodities. I mean, that was basically the series of events that happened. They printed a bunch of money. They blew up a stock market bubble, and then it went into commodities and precious metals. Real estate did very well. It went up a lot. But those who were renting real estate did very poorly because the rents were basically fixed for a year, but their costs skyrocketed. So they were basically just leasing their homes for free, but had all the costs go up in an infinite amount. So that's I would not, I don't know. I'm not big into renting out a house because the government can just say, nope, you can't do anything. They're going to stay there in your house that you own, that you are responsible for paying. And that that doesn't sit with me very well. Does not sit with me very well. So that's kind of my opinion there. It all depends. And I don't have that answer for you. But what I'm going to do? I'm going to buy my companies that I like. I'm going to buy that when they're cheap, and I'm just going to hold on. If I get caught in it, I get caught, and I'm going to ride through it. Ride through it and continue to cost average in. Another one, do you think commodity stocks also get pulled down with a large correction, or do you think we go up as the NASDAQ goes down? It's that same scenario that I described. Andy, can you talk about the short and distort campaign against Recon Africa? I don't know anything about that. But you know what? Let's hope that they can continue to short them, and it's going to provide fuel when they lose a ton of money as Recon Africa continues to have successful wells. If they prove something up that's massive, go ahead and short it. I'm long the stock. I don't even know how much I own. I think I own, I don't know, a good amount, for me at least. I'm pretty satisfied with the position that I have. So if people want to short it, go for it. I mean, they're the ones that are going to have to cover and add to the buying pressure. So that's my opinion. And it says, wow. So yeah, SM will perhaps become a 100-bagger for me. Also, uranium exploration company 92 Energy. It could be a 100-bagger. We'll see. I mean, that's a ways out though. I don't think it's going to happen anytime soon. You have to be extremely patient, extremely disciplined. I partially have that gene, and I partially don't. I can be pretty patient at times, and then there's times where I lose some patience a little bit. But most of the time, I'm really good. Really good. Here it is. Brilliant. Just for the sake of comparison, do you mind sharing how many companies you have in your uranium investment portfolio? I'm starting to feel like an ETF with my 20 companies invested and still want 3 or 4 more. I do own a bit. I will share the companies that I own. I'll write them on down and do another presentation on it if you guys want to know what I own. I'll break them up with, they're mainly developers and explorers for the most part. Coming down here, find an AGM today. No. See if there's anything else that I can answer for you guys. Should we do some Elliott wave analysis for gold, silver, and uranium? I've done that in the past. I've tried it, and I think we're in a pullback right now for gold and silver. Obviously, I think it's going to take some time to kind of base it out and consolidate. Same with uranium too. Even copper's doing it. So a lot of these sectors are doing it. They're kind of pulling back and going to have to consolidate for a little while. And then whenever they start to turn and come back up, I mean, we'll be money because we're in them. And hopefully we'll be, continuing to cost average in, and we get some really good prices. Fingers crossed. Hopefully it just doesn't turn and move back up. Can you do a video of full send largest leverage bets you would be in or are in? Include all sectors such as oil, uranium, gold, silver, and any other you think. That would be awesome. I can do a video on that. So I've got 2 videos. I'll do the uranium one, and then I'll do the full send largest leverage bets. Now, there's a difference here. Uranium's a lot different than the full send oil that I did. So when I did full send oil, what I mean by full send, there were companies that when the ratio was cheap in oil, it was 50-1. We had some companies that just blew out to the downside. What people were doing is they were short selling them and trying to push them to 0. And I took the opposite bet. That is called what I consider to be calling a full send largest leverage bet. Because one, the valuation got pushed so low. These were 0.5% of their all-time highs or lower, that they were being priced like they were going to 0. And there was a good chance that some of these, they could have gone bankrupt. It was like a 50% chance. And what I did is I took some of my money and I did what I call a full send largest leverage bet because I thought oil was going to turn and the charts looked excellent. It looked like they wanted to explode higher. We had the base, we're breaking the base, and I'll show you guys exactly what I was seeing real time with my full send largest leverage bets. I'll release the video. They're mainly oil companies. Now, the difference between oil and uranium is uranium's, they don't really have the leverage in terms of the debt, which is good. But they are the price of uranium is below the cost of these producers. So they are massive leverage bets. All of them are. And it wasn't like oil. Oil was a very unique scenario. Uranium still has to develop their mines. There's a lot more risk there. Now, oil, these are producers that have been producing. They've got everything in place. Everything's like good to go with them. They just have a lot of debt, and some of them they did go bankrupt. So short sellers piled into these things. They drove them all the way down to near-death experiences, basically near bankruptcy. And I took the opposite bet based off of technical analysis, and I did the full send. Some of them they've worked out very well. So in a period of last year I was doing this in October, November. And I'll go over those in another clip, all of the companies and what I was looking for and why I hit the full send. So look for that coming up here soon. If you guys like this clip, I'll end it here. I'll do those other two videos and release them after this one. Give me a thumbs up, and thank you for listening. This is Finding Value.